Happy Friday out there, folks. It's Darius Dale here to present our macro minute for Friday, May 13th. It's Spooky Friday, but we got some green on the screens today, so don't be too afraid. Starting with asset markets, we have stocks up, commodities mixed with crude oil leading, crypto up this morning, dollar down, global bond yields up. Market moving headlines. You had China's credit data for the month of April came out and weakened sharply as expected, with basically 30% of GDP on lockdown. Total social financing was only 910 billion yuan. That's 134 billion month over month. That was down from 4.7 trillion yuan in March. So a big slowdown there, expected to bounce obviously in May and in the subsequent months. Shanghai signaled a possible end date for its lockdown, saying that it aims for zero community spread by May 20th. So that's positive at the margins. Beijing reported a slight increase in cases, so that's negative at the margins because it's causing folks to speculate that Beijing may get the same kind of lockdown treatment. But the Beijing, the Politburo, denied those rumors, as particularly as kind of the public outcry in China is starting to reach a groundswell. We talked about the likely Chinese recovery, the path forward, the likely sort of mix of Chinese stimulus we're going to see assist that recovery in Tuesday's May 22 macro scouting report. Go check that out. That's on slides 16 through 20 and slides 98 through 100 in terms of the outlook for China, what'll get us to get turned officially bullish on China and start to accumulate Chinese assets and correlated exposures. So definitely go check that out. Transitioning, obviously the big story this week was the crypto and the Terra blockchain. Terraform Labs, they halted, they restarted, and then they halted again the Terra blockchain, saying developers are definitely trying to come up with a plan to quote unquote reconstitute the Terra network. They're definitely going to have to do that. One thing I think is pretty positive for now, but also really negative for later on in the cycle. You had crypto.com. They came out of suspended trading in Luna, Mir, and ANC, quote unquote, because of extreme market conditions. This is Binance also stopped trading in Luna and UST, also known as the Terra USD stablecoin. So this is a good thing for now, but historically what we've seen in these sort of kind of suspensions of short selling, bans of short selling, suspensions of trading, what typically happens is that either it's all just building up for a big dump later on down the road when they think market conditions are better, or more importantly, or typically what actually happens is it causes investors who are demanding and reaching for liquidity to sell things that they otherwise would not have sold. So it puts a little bit of incremental pressure on the rest of the cryptocurrency space. And, for when we get to a more adverse part in the growth and liquidity cycles, you might actually start to see more things come unglued as a function of this short-sighted maneuver. Shifting gears, Q2 earnings season watch. You had Apple suppliers, SMIC and Pegatron over in China. They cut their outlooks for the second quarter, citing supply chain snarls, even as factories reopen. So we spent a decent amount of time in that macro scouting report presentation talking about our negative outlook for the earnings cycle. We don't think that we don't think the investors have really had a real reason to start talking about this yet. But we think in Q2 earnings season, it's going to be the number one story on the tape in terms of the likely sizable reduction we're going to start to see to consensus earnings estimates that may make the market a little bit a lot less cheap than it currently appears to be, although it's still above historical mean valuation. So that's on slides 79 through 88, our outlook for earnings and corporate profitability in that macro scouting report. Big movers, Bitcoin up 7% on the relief rally here this morning. Tweeted about that in terms of not shorting or selling too quickly in bear market bounces. They typically rip your face off, and they typically last longer than you expect them to. So don't get too, just have patience is what we're trying to explain there. Bitcoin's up 7% day over day to down still 20%, 26% month over month. Ethereum up 9% day over day to down 33% month over month. Shifting gears to our volatility adjusted momentum signal and probable range processes. US dollar index, that's still bullish FAMs with minus 1.7% of downside versus 1.2% of upside. I mean, this thing looks like what a chart of Bitcoin used to look like. Gold, neutral VAMs, minus 0.5% of downside versus 6% of upside. It definitely looks like it wants to break down. That was a good sell by us last Friday. 10-year nominal treasury yield, bullish VAMs here, minus 10 basis points of downside versus 40 basis points of upside. High yield OES, bullish VAMs, minus 54 basis points of downside versus 28 basis points of upside. S&P 500, that is still bearish VAMs. Of course it is. Minus 5.5% of downside versus 6.7% of upside. VIX, neutral VAMs. You got a minus 28% of downside versus 21 or 31% of upside. So kind of a fair fight in the VIX there. NASDAQ 100 bearish VAMs, but a dog, minus 7.2% of downside versus 9.3% of upside. Russell 2000 bearish VAMs, minus 6.1% of downside versus 8.8% of upside. Bitcoin, as I mentioned, you got the dead cat bounces in crypto. Bearish VAMs still You got minus 9% of downside with 22% of upside to the upper bound of its probable range. 37,000 would be that, but I don't think we're going to get there anytime soon. Ethereum bearish VAMPS minus 8% of downside versus 32% of upside to 27.66. Again, I don't think we're going to get there anytime soon. This is the dance. The market doesn't go anywhere in a straight line. There's always buyers and sellers. There's people who think things are cheap. There's people who think things are expensive. But over time, the truth always comes to bear out. And the truth is the growth cycle, the inflation cycle, the liquidity cycle. Assets do not materially diverge from those cycles. And when they do, that's when you get the biggest repricings in the market. It's kind of like what we've seen this week. Shanghai Composite bearish VAMs. China's now getting, it's perfectly overbought. So we got minus 9.1%, 9.5% of downside to the lower boundary of its probable range. This is the time where you really want to take out your magnifying glasses and really start to study China right here, because when things go from bearish VAMs and they finally get to the being overbought within the context of that bearish VAMs trend, this is when you start to see, hey, does it want to probe that upper boundary? Is it starting to signal that it's trying to change the shape of its probable range distribution, which ultimately means it's changing the kind of character and nature of its volatility adjusted momentum signal. We're definitely going to be studying this very intently over the next couple of weeks. I'm desperately trying to buy China, but we're not going to make the mistake of buying it too early. I think this is no market for cavalier knife catching unless you like losing money. WTI crude oil, neutral VAMP still minus 13% of downside versus 6% of upside. No, by the way, we're not going to tell you on this program if and when we buy China and related exposures. Of course, you have to subscribe for that signal. Agricultural, neutral VAMs, minus 3.9% of downside versus 2.4% of upside. And then lastly, industrial metals, neutral VAMs, disconfirming, kind of my, front running my own kind of potential bullishness on China. This thing looks like it wants to break down, and this is not what you want to see. If you think that we're about to have a Chinese reflation cycle that is investable in any degree. So you still grossly oversold here, minus 13% of upside. But again, I don't expect that to be achieved any minute. And by the way, for those of you who are new, obviously we got a lot of new folks watching the program. We appreciate that. Go check out we use a lot of lingo here that's all quantitatively driven. So go check out our 42 macro playbook to get some of the definitions and some of a deeper understanding of the different pockets of tools that we use to forecast and ultimately take advantage of changing and evolving macro risks. And then go check out our YouTube channel as well on the process, et cetera. So catch you back here next Monday. Everyone have a great weekend and stay safe out there. Cheers.